Welcome to Vantage Point Podcast, a podcast brought to you by NWR Communications and 92 Studio. This podcast is intended for education and entertainment purposes only and does not constitute financial advice.
G'day and welcome to the latest episode where we're lucky enough to have James Clement, who is the Managing Director and CEO of Visan. Visan's listed on the ASX under the ticker VYS, and he talks to us about his journey from an All-Australian footballer with Collingwood and Fremantle to leading what is now a fast-growing and impressive business in Visan. James has a highly disciplined and determined approach to the business, which has seen it almost double over the past 12 months, but all of which you'll come to understand is from a thorough, vertically integrated strategy of the water services industry. We hope you enjoy. James, thanks very much for joining us. I'm, for my sins, a mad Collingwood fan, so this is a bit of a childhood dream coming true, but onto the work side. A bit of a background before we get into Visan. You obviously played footy, went back to Perth, got into the stockbroking game, but maybe you could just give us a bit of a journey in terms of how you came to be where you are today.
Like most kids, you just love playing football. To tell the truth, I really gave no thought to playing professional footy. I had parents who obviously loved me playing footy, but also it was all about finishing school, going to uni, getting a degree, getting a career and just staying there. And sort of fell into footy by accident, got an opportunity to play local football, told my parents I was going to give it a go. I thought there was no future in it. And really the rest is history. Turned up at South Fremantle, played Colts, played reserves, played league, got drafted, ended up in the system, and the rest is history.
How long did you play for?
So I played a couple of years in Waffle and played for 12 seasons in AFL.
Yeah, and you were done and dusted at 12?
No, I had a fair bit left in me, actually, which don't regret now. It's perfect time to go.
To leave when you've still got stuff in the tank.
Mentally missed it.
Yep.
Physically was still in pretty good shape. So I would highly recommend 20 players holding on for too long. Go earlier rather than later. So
tell Pendlebury.
No, he's one
a different kettle of fish.
Probably made the right choice. Yeah.
And talk to us about getting into the broking game.
Yeah, so perpetual university student, did a MBA, but really with a finance stream in there. And because being part of Collingwood, Alex Weiselitz was the vice president at that point in time. Yep. So I took some interest in financial markets and asked if I could do some part-time work. So I spent a good couple of years in reality making coffee for people and looking over their shoulders. But it was really some good formative years. And then they sent me off to a trusted partner, a broker, and just worked my way through there. And in one sense, prior to going back to Perth, I thought I'd have a career in finance, particularly either broking or funds management.
It's you've sort of got quite a good grounding in terms of, obviously got the elite side in terms of sport. You've been exposed to the broking side, so you sort of understand. Now you're obviously a listed CEO. You understand the sort of all the different sides and all the sort of dirty tricks as well that comes with small caps on the ASX.
No, true. And I suppose one of the things is, as a broker or a fund manager, you get to sit across the table from CEOs who are telling a story and are trying to build a business. And it never ceases to amaze you the way that people build businesses or the types of things that they can go into that effectively make money. And I sort of saw a competitive outlet on that, and after a while, I wanted to be sitting on that side of the table rather than broking or in funds management.
If we zero in on Visan, you look at the stock, it's 95% over the last 12 months, 650 for the last 5 years. It all looks very, very easy and smooth sailing overnight sort of success.
Yeah, if only. 5 year overnight success story. No, there's been some hard graft. In reality, it was a 16 mil market cap startup. And everything that comes with that, grinding away in long hours, and I suppose that journey to get to 100 mil market cap and get some credibility and recurring earnings and things was the hardest part. And then luckily got some following on the back of that, just sticking to your knitting. But as you can imagine, lots of time staring at the ceiling at 3 a.m. in the morning, wondering what I got myself into. I
saw in terms of obviously acquired the assets from Ausdrill that sort of kicked off. The whole Visan story. In terms of those 2 or 3 years afterwards, you didn't try and do too much, or you just tried to deliver.
No. So probably at this point in time, worth calling out my chairman, Peter Hutchison, who's great mentor, great friend, tough leader, but good operator. He was the one that really identified the assets with one of our first directors, Sheldon Burt. But birds of a feather, I suppose, in regards to keep your mouth shut, your head down, and just get the business operating, look after the bottom line, and eventually the rest takes care of itself.
Because I think a lot of people say that, not that many people do it in terms of let the results speak for themselves.
It's hard, but it speaks to, which we can get into. But our people, I reckon it's an organisation with very little ego, and just let your performance do the talking.
So Vysarn's not really a story that you can give the elevator pitch just yet. That'll come in time, but if you sort of were to try and break it down into the key divisions or even the evolution of the business as to where it is today.
It's every time we've got an elevator pitch, this is a good problem to have. Every time we have an elevator pitch set, it changes. But ultimately, I suppose the simple one is we are a national water services and infrastructure business. Okay, so what we did recognise, forget about resource or infrastructure or whatever sector, but ultimately water is a pretty sensitive commodity globally, but here in Australia, socially, culturally, environmentally, but it's big business. And so I think that the opportunities in water and playing in that sort of vertical piece in water, wherever you play, the opportunities are only going to get larger over time, whether it's in resource sector in West Australia or the infrastructure sector over here in the East Coast.
And just talk to us in terms of the evolution. And you now are sort of fully vertically integrated water service provider.
Yeah, so we started with the drill rig acquisition off Ausdrill, and that comes with the fear factor in regards to boom and bust cycle and sustaining capex issues that you have with drill rigs and what everybody thinks. But ultimately, they were very much a production-driven style of asset, and that we could see that the assets that we were buying were, one, quite unique, but the service they were delivering, which is effectively putting holes in the ground to either remove water or inject water for resource clients, was only going to get bigger. And then the idea from there is we didn't want to be a drilling company. We wanted to be a multifaceted company. And the other one is to build some real sort of capital-light nature into it. So quite simply, we just built the business upstream and downstream of drilling. And it started as simple as standing on drill rig pads and as we turned up, who left? And as we were leaving, who turned up? And we
figure it out.
Yeah, and we just sort of worked it out from there. And first 12 to 18 months, we mapped out what we thought was the water cycle, first of all in places like the Pilbara, and then worked on where we could get a competitive advantage, what had good margins. And so the service stream for water is enormous. We play in very small pieces of it. But our solution at the end of the day, the way that we've played it is end-to-end. This is resources to start off with. Yeah. It's quite unique. We have some amazing peers that we compete with, very, very good at what they do, probably better than what we do. But I'm quite confident in saying we have the most unique water business in the country as far as what we do end-to-end.
And how you say that, why do you win then? Like you obviously talk about the unique nature of it. Why is it unique and why do you win?
It's a combination of... Look, some good luck. The demand is extreme, so you get an opportunity. But there's no doubt we had to buy work first, prove ourselves. So there was that aspect to it. And then once you start performing, then that particular service becomes entrenched. But ultimately, like most industries, if you can have one player turn up and provide you with a whole value chain, that's what they're going to go for.
Yeah.
And then ultimately, if we can have a situation where we're doing, the planning via engineering, the construction via the bore field, the data acquisition via test pumping, and then ultimately water disposal via managed aqua recharge, just for one example of how it works. If you can provide that end-to-end solution to a client, they're going to take that rather than have to deal with 4 different contractors.
How many sort of projects, in terms of from a scale perspective? I'm sort of thinking from a reputation standpoint. Obviously, you've got a really good reputation now in the industry for delivering all of that. How many times have you done this? Obviously, you've been at it 4, 5, 6 years sort of thing.
Yeah, we have, and I think everyone understands at this point of time. It's worth saying that I'm not a water person. I'm not an engineer. I'm not a hydrogeologist.
I thought you studied marine biology.
I did, but that's probably as close as it gets. While we're only a business that's 5 years old, we've got 30+ year veterans all through our business in every single division. Yeah. So we've just got really smart people that have great industry reputations. And while it looks as though we've built a great business and then backfilled, in reality we've gone and got great people and built businesses around them. And I think that's part of our success as well. And getting a good reputation early, small world, people get backed in rather than the business getting backed in.
And just from a people perspective, what does sort of headcount look like across the different businesses?
So we've ticked through 300 now.
Yep.
So there's about just a bit over 100 here,
Yep.
and a couple of hundred back in Western Australia. And then when you break it down, it's probably now split straight down the middle as 150 blue collar and 150 white collar.
And how do you sort of manage them from a leadership perspective?
Yeah, so
do they each have their own heads? Do you check in?
that has its challenges. So each division per se has its general manager. Okay, and they tend to have vast experience. So once again, culturally, the way you communicate with people and the way people respond, whether they're white collar or blue collar, we've gone and redefined it and really put it now into 3 silos where we've got technology, industrial, and advisory, and then asset management. We've got a chief operating officer who really sits over all the blue collar industrial stuff, who has a long history in hard money contracting. And understands people and how it works. And then you have another director who sits over the top of advisory, who I would like to say has far more EQ than the rest of us, very much a people person, understands running people businesses and the nuances that come with that. One culture of being hyper competitive and proud of what we do and growth mindset, but woven within that, 2 very different cultures in regards to blue collar and white collar. And sort of managing that is difficult, but we've been successful to date.
And when you look at the sort of financial side of the business, how does it look with regards to the different divisions in terms of the breakup of contribution and margin?
Yeah. So if you go back to 2021, we were 100% a drilling business. And then 3 years later, 64% of our earnings at an EPT line was drilling. So you can see that evolution very, very quickly. I would imagine, subject to being successful, and I'll push out to FY26, aspirationally, you'd probably see drilling sub 40%, 33, 35.
So nice and diversified.
Yeah, so the idea being is if we can get to a situation where we've got that capital-intensive contracting piece giving us a third, the technology piece giving us a third, and the consultancy piece giving us a third. Good diversification, multi-sectorial, multi-geographically, counter-cyclical. That's where we'd like to be. So it's kind of where we're trucking. It's not exactly on the timeline we've been aiming for because we're pretty aggressive, but we're getting there.
And from a volatility, you talked about counter-cyclical and whatnot. What's the most volatile in terms of the divisions? Like, what's the most stable? I'm assuming the sort of consulting side.
Yeah, the consulting's very stable.
Yep.
When you look at committed government spend in water infrastructure and consulting, you're talking about the Sydney Waters of the world committing $34 billion over 10 years, like it's locked.
Yeah.
So that's pretty stable.
Yeah.
But the leverage and the margins you get out of that are commensurate with that sort of certainty, which is okay. Then you look at the volatility of something like our industrial division, which has been phenomenally stable for years. And then we have our last half, which was very unstable because of geopolitical issues and the more perceived macro issues in regards to demand around iron ore.
Yep.
And that was very quick to come off, but has been even quicker to go back on again. And if anything, it's probably come back with more of a tailwind than we went into that period.
And so looking forward in terms of where you sort of see the business and the growth, you talked about annualising over, I think you released this morning, annualising over 114 million. Where's the biggest sort of drivers going to come from through that?
Well, I think the biggest step change is if you think about the old Western Australian business, call it prior to our 2 acquisitions of recent times, those businesses together had been growing at about 100% compound annual growth rate on an EBT level for 3 years. That was always going to roll off. Okay. And so from here, the biggest leverage is on the basis of buying wastewater services and CMP. One, based on the pro forma numbers we published, they're 40% earnings accretive. But should we be able to deliver that earnings bridge into 25 and then into 26 based on those pro forma numbers, that's still 35% growth year on year for the next 2 years. So that's satisfactory as a baseline, and we need to achieve that. But so where's the leverage coming from? It's coming from the growth of wastewater services. So we're now into technology and delivering wastewater treatment plants, not only in West Australia, but now looking to come east into regional precincts. And obviously the step change in services and earnings that comes with CMP.
Yeah, that makes sense. And just in terms of, and I think you referred to it in today's release as well, with regards to the businesses coming online and it's still coming to fruition. What's the hold up, but when do they is it integration issues or not
CMP
issues?
and WWS?
Yeah.
Well, the simple one is, I'll start with CMPs. We only completed the transaction a few days before Christmas.
Yeah, okay. That makes
So
a
that's
difference.
you're pretty tough on me,
Yeah.
mate. If I'm pretty integrated.
Oh no, it's just interesting because you see the acquisition and you forget when it settles.
You forget.
Right?
So really that only contributed 1 month.
Yeah, okay. That makes
WWS
sense.
on the other hand, 1st of September, and actually made quite a good contribution. But the other one is tyranny of distance, which we're acutely aware of as well. WWS we could grab by the throat because it was down the road.
Yeah, exactly.
CMP is going to take a little bit of a different approach. One, it's people based.
Yep.
And the other one is just, take it gently, make sure that it earns what it's meant to earn, put our own people in it, look at it for a while, and then make the changes that are necessary.
And in terms of synergies across all of those different businesses, how do you sort of leverage those?
It's really synergistic, and this is part of the story that we need to get a lot better. Is obviously we see it, but it confuses a lot of people. So I suppose if I could just look at wastewater services, for instance. Wastewater services from a synergy point of view, if you think about project engineering is a really profitable business, terrific business. It's technology based, but we tend to outsource the vast majority of the componentry and fabrication of those units and just really make the margin on technology. We'll be able to bring all that in-house now in regards to fabrication of those units, including everything from boiler making and skids to electrical panels and software. And the supply chain integration where we get better margin retention on purchasing raw materials as well. So that works. On the back end of that is when water comes out the back end of a plant, you've got to dispose of it. Now, at the moment, it's reticulated. That's going the way of the dodo. So the easiest way to dispose of it in an environmental sensitive manner is put it back into the ground. Now, the way you do that is via managed act for recharge. So there's another synergy.
Yep.
And then when you start bringing CMP into the language, is they're designers of wastewater infrastructure. They've never had alternative service offerings for clients, but the ability now to turn up on their doorstep and not only be a designer of infrastructure, but be able to provide alternative, modularised, cheaper, bulletproof style of plants, particularly in regional precincts where they tend to get ignored. That's what WWS can bring. And I can just keep rolling on with the amount of synergies that we're now seeing within our business. The thing that's least synergistic within our business, funnily enough, is one of our favourite business units. That's the drilling business.
Yeah. I suppose it makes sense in terms of putting the water back in the ground, though.
Yeah, it does.
Yeah. So it's not completely...
Not completely out of the loop.
Not completely unloved. And if we jump to the sort of more people side again in terms of culture, you often find companies talk about it a lot. It can often be a bit of fluff as well in terms of whether it's for their sins ESG and trying to tick the box, but particularly in terms of a people business and trying to drive, that's pretty bloody important. How do you is there any sort of specific things that you've learned over the last 6 years, or bringing in the acquisitions, bringing in better people, etc.? How do you sort of look at that?
And it depends who you straw poll. I generally think we've got a good culture.
Yeah.
But there's always people in any business that think it's an incredible culture and those that think it's lacking. The key is, one, we're evolving. We're very, very different to what we were, say, 5 years ago, and there's no doubt as time goes by we need to get better.
Yep.
But I suppose the mindset myself and my initial board bought, we're competitive animals.
Yep.
So really, and I don't say this flippantly, it was a competitive outlet, and the earnings and the earning growth with the scoreboard, and there was a little bit of come with.
Yep.
And we built teams and a culture of people that sort of bought into that and have performed accordingly. That's not for everyone. And then particularly as we evolve into a broader business in different sectors, it's about pushing different buttons. But ultimately it's now, and we mean it, because of water, it's still a competitive drive, and we are a capitalist organisation at heart that's about growing shareholder value. But we've now got a whole heap of responsibilities in regards to things like traditional owner partners, environmental responsibilities, social responsibilities around water, and those sorts of things motivate a whole new group of people and the next generation coming through. I think the two style of cultures can live one in the same, but it takes some practice. And the other one is it takes mistakes, which we've made lots of and still not afraid to make more.
That's the only way that you learn. And you touched on the traditional owners. It reminds me in terms of the Visan asset management business. Obviously, it was in the AFR today around De Grey. Maybe if you can just we haven't really touched on that too much in terms of what is it, and what are you looking to do there?
It is a bit of a sensitive one because around disclosure obligations. But ultimately, what you can read between the lines is
maybe just sorry to interrupt. Maybe just a high level in terms of
Look, there's a water issue, it's an environmental issue, and we are of the opinion that there is an outcome that benefits all stakeholders, and that's what we're working to.
And so, ignore what was in the AFR today in terms of that business itself. What is that trying to do?
Yeah, look, it's really exciting.
Yeah.
At the end of the day, what we had really delivered for a nauseam amount of clients is an end-to-end solution around water. And then what we developed within that across our industrial and consulting business units is intellectual property from an end-to-end point of view that we didn't think anybody else had. So while water ownership and groundwater ownership is well understood in Western Australia, we don't think that anyone had really exploited the regulations to become a quasi-utility and to deliver water for great outcomes for heaps of stakeholders. So all we're simply doing is through what we do is secure water in the ground via the regulatory framework, explore it, delineate it, prove it up, and then get the required licensing to own that water in the ground. Then find somebody that will take that water, that benefits from it, whether it be miners, municipal precincts, industrial expansion, farmers, traditional owner, communities. Find that offtake that underpins obviously supply, and then talk to infrastructure players about helping us build and own and function a pipeline that carries water from point A to point B. That is the nub of what we're trying to do. So in one sense, while we have got this fundamentally driven industrial business that will continue to make money and grow, we've kind of got this blue sky optionality on the side that if we get it right, we will have a quasi-utility sitting in the background that really delivers water in perpetuity and creates annuity income streams.
And that it's really similar to the resources model, right? In terms of mining, when you talk about peg and ground,
it's a great analogy. Great analogy. Get the appropriate land access, peg it up, prove it up, develop it, and go from there.
And without, again, from a disclosure perspective, what does that look like? How long is a piece of string, I guess? But in terms of timeline, is that a 3 to 5 year journey?
It's not easy. So we have potential mining clients in proximity to us that can take water tomorrow should we have it. So there's a decent backstop there. But ultimately, with everything that we've published, we are aspirational to deliver water into places like Port Hedland for the Bedara Industrial Precinct, that industrial development, and municipal water supply to Port Hedland. We're still aiming to be there somewhere between 2028 and 2030.
It'll come around pretty quickly.
It will come around pretty quickly. And more importantly, is the things that we need to have in place, and therefore the understanding of the economic metrics of that will be well understood prior to delivering water.
Because you look at the share price at the moment, or the valuation, 200 million roughly in terms of market cap. John O'Higgins at Unified Capital had something out this morning in terms of potentially generating a significant annuity style business. It's not priced. You don't have to comment on that.
No. I think that's appropriate. There is a commensurate level of risk with the opportunity in this Visan asset management. So I think it's appropriately valued at zero at the moment, which is we're comfortable with it. As far as we're concerned, the market will decide what we're worth. Fundamentally, I think, we're probably under. So we're quite comfortable with where the share price is and where the market cap is at the moment, that we can continue to grow it with fundamental earnings. But yes, I won't comment on Jono's numbers, but it has the potential to be a significant value driver.
Yeah, and you can see the competitive juices are already getting ready in terms of delivery.
Yeah, absolutely. And look, it's within that, it's a lot of fun.
Yeah, it's good.
Yeah, it is.
And so that, again, and coming back to the whole vertical integration, that you can basically, in terms of, whether, I don't know the right word for it, but drilling, use your own drill rigs, right?
Yeah, we can do it all.
Yeah, exactly.
Yeah, we can do it all.
So it's not like it's this huge sort of task that you've got to outsource and
almost
in control of your own
destiny. The one thing is, just so people don't think that we've lost our minds, is as you said, we're a $250 million market cap.
Yeah.
The infrastructure to deliver water with what we're planning may cost in the order of $250 million. We haven't got that sort of money, but hence part of our strategy is to potentially find local or international funders who are quite happy to own a piece of infrastructure of that nature.
Sort of chicken and egg situation,
right?
It
is.
You're not going to get ahead of yourself.
Yeah, I think part of that is we thought that would be the hardest part. In one sense, it's been the easiest part. The idea if you own the water and you've got demand for it at the other end, the infrastructure comes
close to yourself.
Yeah.
And just sort of looking forward, in terms of the continued growth of the business, what do you sort of see as the sort of key growth drivers or the things that you're focused on, particularly over the next 12 to 24 months?
Yep. Look, as strange as it sounds, I think particularly with the most recent corporate action in iron ore, and some of the investment commitments that some of these companies are making. Rio Tinto this morning committed another 2.8 to open or commission a new mine every year for the next 4 years. That is in a service and equipment constrained market already. So we think iron ore will continue to grow and the opportunities will continue to grow. I'm not even commenting on price. I just think history suggests that iron ore has been very volatile, but production has kept on increasing. So we think there's opportunities for meaningful growth in our own backyard in West Australia. And because of the demand nature, potentially some pricing power for once, which would be nice. So that's, but I think what's happening on the East Coast, as far as what we can only describe as a generational spend, that's a great opportunity.
It's rising tides.
It is. And so to be able to push into, we're now here in Melbourne in a meaningful way, to be able to push into Sydney and Brisbane, which we're already in the early stages of doing, and then to be able to cross-sell some of our, particularly our technology and our service-style businesses into the East to complement the engineering consulting on this side of the country in 3 jurisdictions. I think that's got some significant leverage if we can get it right as well.
Yeah, for sure. 2 final ones, one personal and one we'll finish on the work.
Okay.
You obviously played for Collingwood. You're vice captain. You moved back to Perth. You got the opening through Alex at Thorny in terms of the industry that you're doing. You don't go for Collingwood now.
That's a tough question.
That's essential.
No. So it's a hard one. When once you've played, you don't barrack anymore.
Yeah.
And I go and watch football games with zero emotion, and I find that I miss the majority of the play because I'm either looking forward or behind the ball the whole time. Just
you still can't. Yeah, you're still so immersed in
it, with what's happening.
Yeah.
But I don't forget my time at Collingwood was just unbelievable. I'd go and repeat that part of my life again and again and again. But I don't lose sight of where I started. That was Fremantle. And the other one is I've got so many opportunities from football. One, to play the game, but everything that I'm doing now is built on the back of it. Is I've got a opportunity and I think an obligation to pay forward. That's why I'm at Fremantle. They need some success, and I'd love to see them be a successful organisation.
That's a very, very good way to finish it there. And then just in terms of business, what excites you the most? Obviously, it's a massive opportunity in terms of the world ahead. Is it getting the stock up? Is it delivering with people? Is it trying to build further integrations, or what's the sort of key thing?
Yeah, look, it's a hard question to answer because
there's a lot to it.
Yeah, I've got a target in 4 years, and I've got a target in the next 18 months. Yet I've got a 5-year strategy in my head as well that I share with my team, and so it's not mine, it's ours. I feel very responsible for the people that have given us money and our shareholders. And my whole thing is, one, I want to manage risk, and then the other one is I want to keep growing. Their value. So that's I suppose what gets me up in the morning, and also what keeps me awake at night.
So it's again, I started with the highly disciplined nature of you as a footballer. It's transferred into listed life as well.
Yeah. Look, it has, and I was a pretty boring player and pretty straight down the line. I think I'd take the same approach.
That's good. Safe set of hands. Thanks so much, James. Been a pleasure.
Pleasure.